Really glad you're on, Adam. I follow this company really closely. You follow it even more closely. Talk to me first about the Model 3. I mean, this seems like it is the biggest thing for this company, flat out. When do you expect it to actually shift, and what price do you think it's going to be?
So our forecasts are far more conservative than the company's forecasts, both this year and next. We expect this vehicle goes into kind of a soft launch mode into the fourth quarter this year, and our forecast is for 2,000, now not 20,000, not tens of thousands, but 2,000 units delivered at the end of this year. That's a very small above zero number. The point of this year is just to have those initial deliveries done, to get the data and the initial feedback from the community. Next year, we're at about 80,000 units. So yes, they've talked about 400,000 or that kind of pace of production. We are nowhere near that. And even if you go out a few more years to 2020, I believe our numbers right now are less than half, maybe a third of what management has been implying they could do. So in spite of that, right, we are constructive on the investment story.
All right, so the price of the car, what do you think the price of the car is going to be?
We have used in our model an average transaction price of around $60,000. So I know there's been a lot out there about
the 35. That's I'm not good at math, but that's more than 35,000.
It is. We think that the kind of people that will put in the order for that car, they won't want the $35,000 version. Okay. So while they technically could deliver that, we think once it's spec'd up with the range and the performance and safety capabilities that the average customer will activate, very few customers will actually walk out the door at that entry-level price. It's more of an advertisement. We think it's going to transact more like 60.
So one of the things that struck me was after the acquisition of Solar City that the impact of the bomb of Solar City's balance sheet or cash flow statement was really going to hit the cash flow burning Tesla in a bad way, and we certainly saw that in the first quarter. How do you expect that to moderate?
Well, that's going to be up to them to prove, right? So they have acquired another cash-consuming operation, and one with a fairly sizable balance sheet as well, okay, which adds even more financial leverage to the story. And a lot of investors, understandably, thought, we didn't sign up for this. And so throughout the summer, and we were also on the sidelines as well during that time as we digested it. Right now, we have, I'd say we have the cash consumption of that business in our medium-term forecast. We have zero value of Solar City or Tesla Energy, for that matter, in our base case right now. We still value the company as entirely on as a transportation company.
But you've got battery sales in your model going out and growing, and that battery business hasn't been working very well yet. Where's the give and take there?
Well, we think the battery business, the way we've seen it is, it was a necessary requirement for them to achieve anywhere even near their volume goals. We think that they understandably wanted to secure their own reliable supply of high-quality batteries that that they could have control over the cooling system and mitigate any risk of fire or other problems. And so they kind of needed to do that themselves. Whether the battery business becomes a separate business all its own, we've done some work with Stephen Bird and our electric utilities team of some of the market opportunities for stationary storage. We can come up with a few percent of the value of the company, but on a market cap of $42 billion, Cory, even bullish assumptions for Tesla Energy, it's still a transportation company. Those other ones are more rounding errors right now.
So where are you in terms of cash burn? What do you expect it to be? Because I was surprised that the recent stock offering wasn't bigger, because it seems like they're going to need a lot more cash just to get through this year.
So we have them, they're targeting around $2.5 billion of capex in the first half of the year. If you put anything, kind of call it $2.5 to $3 billion of capex for the whole year, I think on most people's models, the company's going to be burning somewhere between $1, maybe $2 billion of cash this year. Now, they started the year at over $3 billion gross liquidity of cash. So on our model, we still end up with, even pre-cap raise, around $1 billion, maybe within $1 billion. Post-cap raise, you can add to that number. So yes, on paper they can do it, but it gives them a bit more breathing room. But yeah, I'd say almost anybody with a model on Tesla has them burning cash this year and probably next year. And we have them burning cash even into 2019 a little bit.
So you've got a bullish price of the tone of your voice suggests that maybe you think these guys have got a lot of proving to do.
Oh, absolutely. I think the Model 3 itself, and we point out to our clients at Morgan Stanley, even doing a handful of Model 3s this year, the proving point isn't going to be 0 to 60 in 2 seconds, or I mean, that's probably easy for them to do. It's going to be safety. We think this year, Corey, it's all about safety. Can those initial cars, whether they're independently tested or tested by Tesla, are they really 10 times safer? Okay, by putting that liquid-cooled supercomputer in the vehicles, and if that happens, I think that a lot of other members of the automotive ecosystem are going to really, really take up and notice. And we also think it's going to affect the used car market, because the average car on the road, in the U.S. is 11 and a half years old. Some of them have tape decks, practically no software, and if this vehicle really works with a steering wheel, we're going to have a used car problem that can affect the asset-backed securitization market, the FinCos, the rental car companies. There's all sorts of interesting things that could happen at that point.
I guess one more question. Elon Musk, news today that he's looking at starting a third company. He's already got, not including Solar City, he's already got 2 companies. Would you rather have a full-time CEO at this company? Do you wish Elon Musk or someone was running this company round the clock, not just part-time?
In an ideal world, we could clone Elon Musk and have.
Well, we can't. Since we can't.
Unless that's the company he's starting. You tell me. Cloning, but seriously, in an ideal world, sure. Having very talented management leadership. We never have a good enough leaders in any organization, right? To devote enough time to it, and I do believe it is true. He might be spending even more time at SpaceX than Tesla. Depends on the week. You could ask him yourself about that. Up to this point, okay, it has not stopped his ability to make a car that every other auto company that we talk to has an enormous amount of respect for. So the proof is in the pudding, and I think to your point of the risk of that question, the next 9 months are gonna tell us a lot.